So today we're going to talk about lesson 1-1. We're going to go over learning objective 1, describing the different users of accounting information, and learning objective 2, prepare a net worth statement and explain its purpose. The role of accounting. So data must be recorded and reported in accounting reports. So that is the role of accounting. It's data that's collected through transactions, any type of transaction through the business, like um, money that goes in and out of a checking account, money that is owed to a business for costs of goods, money that you pay out to the electric company, the phone company, money that you owe, like for the building, if you owe the bank for the building and you make a payment every month. All of these different things going in and out of your account, or you have to have a way to keep track of everything. These are called transactions. So the information that can be provided to business owners, managers, investors, and others to make business decisions and measure performance. So all of this information that's going in and out of a business, all of that information is, they keep track of it. And the role of accounting is to take all of that information from the business or from your personal life and compile it into a summary and make it easier to make decisions based on that. So, accounting is the process of planning, recording, analyzing, and then interpreting the financial information, just like I said. So, an accounting system is a planned process designed to compile financial data and summarize their results in accounting records and reports. So the financial reports that summarize the financial condition and operations of a business are called financial statements. So imagine a really large corporation that has thousands of employees and thousands of locations, thousands and thousands of bills that are going in and out and being paid every single day. How would you ever determine the financial stability of that business and make decisions based on all of those thousands of transactions? Well, by keeping track of them in the accounting system, they are able to pull all of that information. A lot of this is this is all done by computer now, but it's all compiled into one small financial statement that is tied with a neat little bow, and you can make the decisions for the financial decisions for the company based on those statements. It compiles all the information into one small area. So, accounting in your personal life, you think about all of the transactions that you make on a day to day basis out of your checking account, and the money that you pay every month on things that you've bought that you owe money on. So, figuring out a net worth statement allows a person extending the loan or giving you a loan, letting you take out a loan for debt, to see the financial position of the borrower, you, the borrower, on a specific date and make a lending decision based on that. So, if you don't have very many assets and you're really wanting to buy a car, and they think, oh gosh, okay, they don't have a paycheck coming in every month, how are they going to borrow or give you money to lend you money if they don't think that you can pay it back? So this is how banks make decisions based on what you have as a net worth and what that is. Okay, so first off, let's talk about some assets. Anything of value that's owned is called an asset. So right at the top of the chart of accounts there in your book, you can see that an asset is the first one listed is cash. All right. So anything of value that's owned is called an asset. If you own your home, for cash. That's an asset. If you own a car and you need cash, you sell the car and then you can have cash. So those are all assets, anything that can be turned into cash. Okay. An amount owed or a debt is called a liability. So when you owe the bank X amount of dollars for that car that you just bought, that is a liability. So the difference between personal assets and personal liabilities is called personal net worth. So assets minus liabilities equals net worth. And in a business, the net worth is called equity. Equity is the difference between assets and liabilities. So, personal net worth statement is shown below, and this is for Seda Kelchi, her net worth statement, and September 27th, 2022. So, this is the actual day that the net worth statement was pulled. All of the statements that we will be dealing with in the next semester are in the same type of format. At the very top is the name of your company or the person, then what kind of a statement or what kind of financial statement we're looking at, and then the date that it's made. Okay, so that's all centered at the very top. And then as you can see, we have assets, liabilities, and net worth. So we list everything in order. So as we talked about, assets minus liabilities equals net worth. So we would list all of our assets. So you have a savings account with $2,000 in it. That's an asset. A class ring. You probably don't want to sell your class ring. You want to wear it. But if you took it to the pawn shop, she could probably get $250 for it. Okay, so it's worth $250. That's listed as an asset. She could sell it and get cash for it. So then we're going to total our assets. 2,000 plus 250 is $2,250. Her total assets are $2,250. Just like we've learned in math, we would draw a single line underneath that to denote that we're adding. And then under the $2,250, we would draw another line. So next, we're going to list our liabilities. So say she owes $50 to her parents. They gave her a $50 loan. She has to pay that back. So it's a liability. She owes that. That's a debt. So we list that as a liability. She owes $125 to Ace Electronics. Say she bought a cell phone and she's making payments on it, but that cell phone cost her $125. So that's a debt. She owes that money. It's a liability. So we're going to draw a line under that, and we're going to add our total liabilities, which was $175. And then we're going to draw another line underneath that. So following our equation, total assets, which is $2,250, minus our total liabilities, which was $175, gives us our net worth of $2,075. We would then go ahead and draw two lines underneath that to show that that's our total. That's what we got. So if we needed to sell all of our, cash in our assets, we would want to make sure that we take all of the liabilities that we have off of that to find our net worth. So we're going to go through, again, this is just telling us the order that we would do that. So ethics in business. Some of you may know what ethics is. Some of you may not. Ethics is the principles of right and wrong that guide an individual in making decisions. Okay, so you think about these large corporations that have lots of transactions going in and out. Do you suppose the temptation to do things that are not on the up and up is there? Yes. You have to have a strong a moral compass of the principles of right and wrong. Those are ethics. The use of ethics in making business decisions is called business ethics. We are going to talk about this throughout the semester, different things that are ethical or not ethical, and we will make decisions based on that, so that would be more clear for you, okay? We're just touching on it right now. Those are the definitions. So we're going to audit your understanding. What is accounting? Okay, we just went over that. What is accounting? I'll give you a second to go ahead and write that down. So accounting is the process of planning, recording, analyzing, and interpreting financial information. Remember, this is the way we record and plan and analyze all of those different transactions that go in and out of the business. That's what accounting is. Again, these definitions are in your book. I would like you to write them in the Canvas area of the text box there so that I know that you have been following along. Okay, why is accounting called the language of business? This was directly out of your reading. Accounting provides financial information to everyone who needs it to make good business decisions. That's why oftentimes it is called the language of business, because we are making business decisions based on those numbers that we've entered in, okay? Describe a scenario in which you, as a non accountant, might use accounting. An example that they give us: answers may include creating a personal budget or providing information for a loan or a credit card application. These are all reasons why you might use accounting as for personal use, okay? So go ahead and finish, answer the questions that I've submitted on Canvas, and go ahead and submit that. And we will go over the work together in class tomorrow. Thank you.